Indian startups in financial limbo as Silicon Valley Bank collapses. Shockwaves were felt across the tech industry as the largest bank failure since the 2008 financial crisis leaves Indian startups scrambling for funding. Is this the end of deflated stocks? With more layoffs on the horizon, the closure of Silicon Valley Bank could spell disaster for the Indian startup ecosystem. Find out more in this must-watch video. Silicon Valley Bank (SVB) was a bank that specialized in lending to technology and life science firms, as well as venture capital and private equity firms and their investors. The bank operated in several countries, including the United States, Canada, and the United Kingdom. However, during a period when interest rates were extremely low, the bank invested heavily in US government bonds. Because the bank's bonds began to lose value, the value of the bank's bond portfolio fell. This occurred as interest rates rose, making newer bonds more appealing to investors. When investors prefer newer bonds, demand for older bonds, such as those in which Silicon Valley Bank had invested, falls. When the value of these bonds fell, so did the value of the bank's portfolio as a whole. This made it more expensive for tech startups to borrow money, and many companies withdrew their deposits from the bank. This triggered a classic bank run, resulting in the bank's collapse and closure. SVB Financial Group's failure has been dubbed the largest bank failure since the 2008 financial crisis. So, what does it mean for the Indian startup ecosystem? SVB had exposure to 21 startups in India, but how much money was invested there is unclear. It is speculated that it is likely to be more than $1 billion USD. Many Silicon Valley entrepreneurs are enraged and in the dark as a result of SVB's abrupt demise, the largest in more than a decade. While some people are keeping a close eye on the situation, others have begun withdrawing their deposits from the US-based bank. For growth and expansion, Indian startups rely heavily on funding from foreign investors and venture capitalists. Silicon Valley Bank was a major player in this space, providing banking and financing solutions to a number of Indian startups. Its departure is likely to result in a funding crunch for Indian startups, particularly those in the technology sector. Indian startups with deposits at Silicon Valley Bank may face disruptions and delays in accessing their funds, compromising their ability to pay vendors, employees, and other stakeholders. These disruptions may have ramifications for the broader ecosystem, including other companies and investors involved with the affected startups. Companies may need to borrow in the short term to meet the March payroll, and regardless of the size of the company, there will likely be unplanned costs associated with that exercise. If they do not have access to that money, they will have to fire a number of employees. To make matters worse, the startup ecosystem is already experiencing a funding winter, forcing companies to dip deeper into their reserves. Panic has definitely set in. Explains why our parents always emphasized on getting government jobs. Sorry, Papa. In the long run, the closure of Silicon Valley Bank may reduce the availability of financing and banking services for Indian startups, particularly those in the technology and life sciences sectors. This may make it more difficult for these companies to grow and expand, as well as limit their ability to compete in the global market. Startups may find it even more difficult to raise funds. Rajiv Chandrasekhar, Minister of State for Electronics and Information Technology, is said to be meeting with some Indian startups affected by the SVB collapse to determine how the government can assist them. Although there is a silver lining, the FDIC, the American equivalent of the RBI's DICGC, insures deposits up to $250,000 per depositor. There is some hope, but startups that bank exclusively with SVB will face difficulties if their working capital requirements exceed $250,000. There will be a delay which could last several months or longer, depending on how and when SVB liquidates its remaining assets and distributes the proceeds to depositors.
Next steps are really very simple, which is we never ever want to be in this situation as a company, and that's what we're working with our founders on. I think one high-level thought that I've been playing with is how can a startup right from the seed stage have access to a fractional CFO who essentially gives them the oversight that is required to help them think through all things that matter, including treasury and how they are parking the funds that they're raising.
It remains to be seen how the fallout from this event will manifest itself in the coming months and years. But the Indian startup ecosystem will undoubtedly need to adapt to this new reality.